The crypto market just took a nosedive. Bitcoin dropped, Ethereum slipped, altcoins followed. But the big question is why? No, it's not just the Fed this time. It's something bigger.
20,000 people cheering for every executive order signed.
President Trump comes in and
President Trump just reignited a trade war, and this time, it's global. Let's break down how new U.S. tariffs might be behind this latest crypto crash. On August 1st, President Donald Trump signed a sweeping executive order imposing new tariffs on over 68 countries.
India is preparing to face higher U.S. tariffs between 20 and 25%.
Yeah, I think so.
India hit with 25%, Pakistan 19%, Iraq 35%. Some countries even got slapped with rates as high as 41%. This was not just a political move, it instantly triggered fear across global markets. Within hours, stock indices dipped, commodities reeled, and yes, crypto followed suit. So why would a trade policy affect decentralized digital currencies? Here's the thing, crypto may be decentralized, but it's not detached from investor psychology. These new tariffs signal economic instability. They scream global tension, and that triggers a classic risk-off reaction from investors. They start pulling money from high-volatility assets like crypto and seek safety in the US dollar, bonds, and gold. That's exactly what happened. Bitcoin slipped over 3.5%. Ethereum lost nearly 4%. Altcoins dropped harder. This is not just a short-term dip. When tariffs hit this hard, they don't just disrupt trade, they influence monetary policy. Higher tariffs, higher consumer prices, more inflation, delayed Fed rate cuts. And guess what? Crypto thrives in a low-interest, high-liquidity environment. If the Fed delays cuts due to inflation pressure from tariffs, crypto could remain under pressure longer than expected. All eyes are now on the Federal Reserve's next meeting. Inflation data post-tariff implementation. Bitcoin's support levels around 110,000 and Ethereum's $3,000 range, and how emerging markets retaliate, which could ripple back to U.S. sentiment. If global retaliation kicks in, it could spark more volatility across risk assets, including crypto. The message is clear. This crypto crash is not random. It's geopolitical. And if history is any guide, trade wars and financial markets don't mix well. If you want more real-time breakdowns of macro events and their impact on crypto, hit that subscribe button and turn on the notifications. Stay smart, stay ahead. See you in the next one.